Deutsche Bank tumbling. Credit Suisse bailed out by getting acquired by UBS, Blackstone gating funds. We've done these videos over the last few months. Our blog articles, description has our blog there. Please go check that out. But Deutsche Bank now on the chopping block. We just did a video on Janet Yellen. Please go check that out. It's one of the most important videos we've done recently, so please go check that out. And calling a secret meeting for all the top financial regulators, Federal Reserve, FDIC. These people are clowns. They're not going to do anything. The system is completely breaking. The downtime of banks is like, what are we doing here? And the devaluing of your currency, your time and energy, stealing your time and energy, that it's incredible. And we just accept this system. We accept this system. Like this is what we should be doing. It's what we should be living with. It's mind-blowing. Absolutely mind-blowing. Shares in Deutsche Bank fell sharply, dragging down other major European banks and leading German Chancellor to express confidence in the country's largest lender after fears about the global financial system sent fresh shudders through the market. Deutsche Bank shares closed down 8.5% on the German stock exchange after falling as much as 14%. That followed a steep rise in the cost to insure bondholders the credit default swaps against the bank defaulting on its debts, known as credit default swaps. So there you go. Those are CDSs. So whenever you see CDSs, so that's the insurance on something failing, basically. Rising costs on, and Greg Foss, there's many guys that talk about this all the time. So you want to go to Twitter and check on, Greg Foss. He's always tweeting about credit default swaps. Joe Carlasari will, Dr. Jeff Ross. Rising costs on insuring the debt were also a prelude to Swiss lender Credit Suisse's government-backed rescue by rival UBS. Ooh, government-backed rival. I haven't heard that. I haven't seen that. That hastily arranged takeover Sunday aimed to stem the upheaval in the global financial system. After the collapse of the two U.S. banks and jitters about Credit Suisse's long-running troubles, all kinds of trouble, not just financial, but humanitarian scandals, everything. I mean, mind-blowing stuff. Check into that. Long-running troubles led to its shares to tank and customers to pull out their money. And the greatest thing I said in one of the previous videos is that Powell, the Federal Reserve here, is raising rates, which only speeds up the people removing their deposits from the banks because they want more yield. So they're putting them in treasuries because he's increasing yield. So they'll go buy new treasuries or maybe the money market funds and things like that, or CDs. So it speeds up people removing their deposits from the banks because the banks are providing anything. They're not giving any yield, which is beyond me. I haven't seen anyone talk about that, but the banks are still giving 0.01%. So people are removing their deposits from the banks. It speeds up even more because now they're like, okay, now you guys are bailing people out, so my dollar's being devalued even more. So I need to try to stem this tide somehow. And they're going and removing more deposits and putting them into treasuries, and and they're putting into money market funds, which makes sense. As whether Deutsche Bank could be the next Credit Suisse, there is no reason to worry, Schultz said. Well, when you have to say there's no reason to worry, that means there's reason to worry. We saw this with crypto stuff, like, oh, things are fine. Things are totally backstopped. No. Wrong answer. This is absolute clown world. This is the fiat. This is what fiat Ponzi's give you. The banking system, central banking, command and control economies, Marxism, Fabianism, the socialist system. These are all the same thing, this Keynesian worldview. It doesn't work. Modern monetary theory. Oh, you just owe yourself, Paul. Come on, Paul Krugman. Figure it out, buddy. These guys, they have all the textbooks in the world, but they can't see the forest from the trees, right? They're too smart by a half, as Greg Foss says. Deutsche Bank has thoroughly modernized and reorganized its business and is a very, very profitable bank, Schultz said. Like Credit Suisse, Deutsche Bank is one of 30 globally significant financial institutions with international rules requiring it to hold higher levels of capital reserves because of its failure could cause widespread losses. You know what I find funny too? All the regulations, all the requirements, all the rules, all the laws against or for or with banking, all these things you have to disclose, and I mean, just millions, right? It's like one of the most regulated industries. Yet, the one thing they don't need to tell you is the one thing they should tell you. I mean, you can get rid of all that stuff. Talk about work, the lost time and productivity and energy. All they have to tell you is, hey, we take your deposits and we go gamble them out. That's it. You have to tell one thing. Now, granted, maybe half people or a lot of people wouldn't put your deposits there. Duh. Of course they wouldn't, because why would I put my cash in the bank? But they have to not tell you that, obfuscate that truth by a bunch of smoke and mirrors, a bunch of other rules and laws and regulations, all these artificial things outside in the outside of the spider web, saying like, look how financially stable we are. Look at our reserves and our proof of this, and look at all these laws and how safe this is, and federal deposit insurance and all these things. And all they have to do is tell you one thing. Could have wasted, you didn't have to waste all that time. You didn't have to waste decades of lawmaking and lobbying and stripper parties and martinis after work. You didn't have to waste any of that time. You didn't have to do anything. All you have to do is say, hey, you can hold your money in the bank and get some spread here, get some yield, because we're going to go gamble it out, and you might lose it, but we're going to go gamble it out. And if you don't want to, and it's a dollar, the dollar is debt. All fiat is debt. So it's owed back to the central banks with interest. So you have to hold it in a bank, or you're forced to largely, because you need yield. You need some type of yield, hopefully, to offset the debasement of your currency, which again can't happen in this Ponzi. It's a circular firing squad. It's an electrical strip plugged into itself. You can't. I mean, I'm laughing. It's so sad because I've prepared for this for 12, 14 years. This is what we talk about every day here, every day. To get independent, get resilient, so that these things, you can laugh about these things. And unfortunately, we're going to have to all go through this together. A lot of bad things, a lot of unrest, things we've been preparing for years, we've been talking about for a long time. So let's get together, build community of like-minded people, and get strong. Other major European, wow, I don't know what that is, banks also fell Friday. Markets have been rattled by fears that the banks may have unexpected troubles, like the U.S.-based Silicon Valley Bank, which went under after customers pulled their deposits out and suffered uninsured losses because of higher interest rates. And again, because of the Fed raising rates, their bond purchases, when they bought them all up the last few years, are underwater. Unrealized losses. And then they had to realize them because they had to sell those bonds at a loss in order to recoup some cash, because they don't have any cash. Again, remember, they take your deposits and they go lend it out. Well, they had to recoup cash because too many people came back to get their deposits. So they had to sell these assets that were underwater just to recoup some cash to pay out the deposits. And that's where these banks have all this trouble, because then they're like, oh, we don't have anything. It's a bank run, and now we're insolvent. Now we're bankrupt or whatever. Again, the hilarious part in ending with this, near the end of this, is the Federal Reserve was literally created, one of the reasons, well, that they say, the reason was to ensure the banking dynasty families, ensure that they continue to stay wealthy. Let's be real. However, what they said was the case was to ensure stable, employment and inflation rate. They've done anything but that. They're causing demand destruction, destroying the economy, destroying jobs. Interest rates all over the place. The cost of money itself, the cost of currency itself is the interest rate. They've destroyed all these things, and that's literally their only jobs, right? Just like the only thing a bank needs to tell you is, hey, we take your cash. You need some yield because it's a debt-based instrument, so we're going to take it out and we're going to lend it. Again, as a real estate investor myself, I can go make money out of nothing. I can go take other people's money and go buy a house with it, turn it around, renovate it, and then refinance it, pull out even more money, give that money back to those people, and then pocket the difference myself. I just made money out of nothing, and we've done that. That's what we do. We don't do it as much right now just because the markets are absolutely insane, because we saw this coming, because I've been studying this for 12 to 14 years. This is not hard to see. Markets have been rattled, of course. Credit Suisse's troubles, including a $5.5 billion loss on dealings with a private investment fund, predated the collapses of SVB and Signature Bank, but depositors and investors fled after the U.S. failures and all the attention, which social media is going to speed up these collapses, which is great. It's great for the health of the economy. It's great for the health of all of us long term. Deutsche Bank has turned in 10 straight quarters of profit, including 5.7 billion euros. Before that, the bank went through a long stretch of low profitability. Despite the rebound under Segway and neutral candidate, the market values the bank at less than the assets on its balance sheet, he said. That means investors are still worried about what the risks are and what the bank has on its balance sheet or its earnings potential going forward. And that's not good. Big global banks have sold off more than smaller ones. In recent financial turmoil, he said, it's contagion. It's lack of confidence. See, there's that. We just talked about the last video. Confidence. Con game. A lack of trust deficit. When you're in a fiat-based economy that's built on debt, inflationary, Keynesian world, you have to have confidence. You have to have confidence. If you don't, fiat, by decree, by flapping your gums, a narrative. If you don't, and 3% of us, or 5%, or 10%, every Trump supporter just says tomorrow, I'm gone. I'm taking my currency out of the system. I'm going to Bitcoin. Boom. The fiat legacy monetary system completely collapses. Gone. Lights out. Nighty-night. Because it's not money. If you want a full reserve, you would hold gold, and you pay for that storage because you have guards, guns, security, technology guarding your assets, or you may hold it in your house maybe, and it's insured, more insurance. You've got firearms in your house to protect it, whatever. Or you hold Bitcoin because it's the best of both worlds. It can move as fast as fiat over space with no fees or almost fractional fees, or and it can move over time like gold can. Fiat can because it gets devalued over time, but gold can't. It just can't move over space. So Bitcoin is the solution to the problem. It's the discovery that defeats both of those problems, time and space. That's why Bitcoin is the answer, and that's why I've now seen over the last decade this process of me being in politics and fiat and seeing that fight, and then going and seeing gold and silver and thinking that was the answer, and then understanding the last 5 years, oh, Bitcoin, wow, this is the answer we've been looking for. This is the discovery. This is the invention of fire, the discovery of the wheel. So lack of confidence. Well, of course, when you have a system built on debt, a debt-based dollar, a liability, people are told they're assets, and then banks are failing all around you because they're not told what actually a bank is, what the central banks are. Well, of course, you're going to have lack of trust, and of course, people are going to leave your system, especially when you're freezing freezing countries out of the system, and people are leaving your dollar, leaving your network. Again, the more people leave Facebook, the lower the stock price goes because the less the network effect is. The more people join Facebook or join Instagram, the more network effect there is, and the more valuable that company is, that network effect. Same with the dollar, same with Bitcoin. People are leaving the dollar, so the decline in the dollar is going to continue. But people are joining the Bitcoin network, so the value of Bitcoin will continue growing. The sell-off might also be more emotionally driven, so to speak, you think, rather than based on facts. Well, that's how humans work. But this is something that has to be expected based on its history and performance after the global financial crisis. Incredible. These people are so behind the eight ball, so stuck in the fiat old world. Whether it's just a reflection of investors' anxiety at the end of a very stressful week. Oh my gosh, some technical factor. It's still too early to tell. Incredible. Absolutely incredible. International negotiators agreed, following rules. Again, nothing to do with financial rules. People are saying like, "Oh, Trump, this, Dodd-Frank Act," and all the. At the end of the day, none of that matters. We're so far down at the end of the tracks. We're going 88 miles an hour, and there's the tracks are out ahead. The fiat dollar is coming to an end. The fiat inflationary legacy system we have is completely bankrupt. We are $31.5 trillion in debt. Where do we think this goes, guys? Where do you think this goes? It doesn't go the other way. It doesn't reverse. So how do we get off that sinking Titanic and get onto the life raft? It's Bitcoin. I appreciate your time and energy. Please share this out. Please let me know what you think, what your thoughts are on this. Please share it out because the algorithm hates truth. Appreciate your time and energy. Because Bitcoin is time is Bitcoin. This is not financial advice. It's freedom advice. Question everything with boldness. And I appreciate you coming to my TED Talk as well, as I'm obligated to say about my wife. I look forward to seeing you on the next one.